I am CJ Follini, and we'll jump right in to the next slide. And there we have it. That's the title, Preparing for the Great Wealth Transfer, How to Engage Young Investors, not me, How to Engage Young Investors in the Age of TikTok. Yes, I am on TikTok, and it's called FinTok. I know, scary though it may be. That is the title, The Great Wealth Transfer, and that's what we're here to talk about. Next slide, please. Okay, what is Noyack? We're Sherpas. We're guides. We decode the private investment universe. We don't talk about public securities. We do not speak about 60-40, and I have a lot of opinions on that. The private investment universe, AKA alternative investments, as the son of immigrants, I don't agree that public securities are the default. So why would private investments be alternative? For us, they were the default, and thankfully so. What do? We educate, we engage with community. I'm going to argue about what David Chubak said about advisors. One-to-one, I'll show you the data about that. One-to-many, in a time of community, peers, that is very relevant. And frankly, I have opinions on advisors as well. Learn, engage, and invest in private markets through education first, always education, expertise, and access. It's an insider's game. That's what the data shows. That's what we believe, and we're here to open that up. We're all Noyack. That's the point. Yeah, the gray hair. I have a bone to pick with my team. They put that on there. Thanks a lot, guys, for the gray hair comment. By the way, as you can see, the delta between what that picture is and what this is, that's thanks to generative AI, Lensa. I look like that on the camera, and I look like this in real life. So there's a tip. I've been doing this since I was 16. Son of immigrants, and as Italian immigrants do, they work hard. My father was a highly decorated New York fireman, built a construction and a building company, built part of Idlewild Airport, also known as JFK, Whitestone Bridge, and the US Open Tennis Center. So he was successful. But at the same time, I'm 16, and he says, I don't know anything about developing a foreign trade zone in somewhere, New Jersey, with the Rockefeller Group. CJ, you're going to have to figure it out. And I say, you sure? Have you seen me? And he's like, yeah, you're going to figure it out. And that's what happens. And that 16-year-old CJ wished he had a community to bounce ideas off of, wished he had education that he could access asynchronously, wished he had some guidance to figure that out. So Noyack is really for that 16, 18-year-old CJ and all of those here. Now let's look at the data. Enough about me. Next slide, please. This number, why did I stop being a 30-year family office? I ran a fairly significant investment syndicate of 9 families, 7 of which were immigrants, so I guess there's a thread there. And we did pretty well. 23% IRR in commercial real estate, venture capital, private equity, consumer packaged goods, and we were also, oddly, the second largest owner of New York City taxi medallions, what we called special situations, and at a much lower price than 10 years ago. So we did all right. But this number and COVID led me to say that there is another chapter here in what we did. 2 of our boomer founders of these 9 families passed away. My 9-person investment committee went to 17. Now, those conversations were quite different. I know what Mr. Chubak said. Yeah, they weren't looking for advisors. They were self-directed. They had ideas. They wanted to discuss them. They wanted to learn about them, and they wanted people to bounce them off. They wanted community. They did not want someone to tell them what to do, because I tried, and they told me where to go. And I can't share that with you right now. So by 2025, that's 2.5 years, 4.4 trillion will be inherited by millennials. Now, the cusp Gen Z, also known as Zillennials, that is 25 to 42, you could probably say 23 to 44. But it is millennials, 4.4 trillion in 2.5 years. I want you to take that in, because that number is the reason we're doing this. It is immense. And only 20 years later, 38.5 trillion, same generation. We haven't even gotten to Gen Alpha, which is the current high schoolers and early college. Haven't even gotten to Gen Alpha, or the heart of Gen Z. One generation. Okay, so I belabored that point, but I think it's where everything begins in this entire conference. Wealthtech is built on that number. Next slide, please. Some very fancy demos. So this group, this one age group, is going to have a $4 trillion allocation by 2028. That's only 5 years. $4 trillion to private. This is one asset class. Or, excuse me, it is one sector of private. This does not include public securities. It doesn't include what Robinhood does, and Wealthfront, and M1, and everyone here today who is talking about public securities. This is $4 trillion in one age group, in AUM within 5 years. Look at the growth. That aqua, unfortunately, is me. I'm Gen X, and we're going down. We already didn't start. We don't have an adoption. I might be anomalous in terms of adoption of private, but you can see the allocation for Gen X is only 2%, and yet that's who Edward Jones and everyone is talking to. Okay, so you're going to do more no-fee commissions. But millennials want to learn about the private investment market, esoterics, private credit, commercial real estate, and it's going to grow. And the numbers, by the way, all of this is sourced from FINRA, government, 1,200 cohort survey by Bank of America, Cerulli Associates. The data is endless. Trust me, we've looked at it. Next slide, please. All right, so behaviorally. I knew my behavioral economics degree was going to come in handy at one point. Behaviorally, what do they want to do? Where do they want to do it? And whom do they want to do it with? Sorry to break it to all the wirehouses, but they don't trust public markets. Surveyed. 75% think that they have to be in private investments in order to gain generational wealth. But people forget Warren Buffett, stock market guru, right? Couldn't care. Have you ever seen his portfolios over historically? His public securities? No. Private equity. Warren Buffett and Berkshire has been 68% allocated to the private investment market, mostly private equity, historically, throughout his entire career. That's why he's the guru. That reason. And they believe it. The millennials believe that. Now, their average is already 3 times my generation's. What happens if that 16% average, which is 3x the Gen X generation, what happens if it gets to 30%? My mentor and North Star, David Swensen, late legendary David Swensen, Yale CIO, he wrote the book, literally, the book on modern portfolio theory construction. And then there was a postmodern book as well. Well, he said institutions, public, nonprofit, for-profit, and individuals should have an optimal 30% allocation. Again, my group and the 9 families I work with were anomalous. We're way, way over 30%. I'll give you one little anecdote from a person who immigrated here. He was a bricklayer when he got here. Became one of the largest residential multifamily owners in Manhattan. His son sold their portfolio for $1.2 billion. He arrived here in 1975, dear friend. And I asked him, I said, Mr. C, how come you have no stocks, no bonds? And he told me, and I thought at the time that how silly it was, and in hindsight, the genius of it, why would I play a game that I don't control the information or the fundamentals? Why would I let someone else who has better access and information have an advantage over me? And at the time, I just thought, yeah, what was he saying? But now, it's pure genius. So, imagine 16% of 38 trillion going to 30% in the next 5 years. Do you see the numbers and the opportunity? Next slide, please. What else? They start earlier. Under 21, 31%. So that means if you're talking to millennials, you're late. Because millennials, the first millennial was born in 1981. Well, that would have been 20 years ago when they reached 21, and if they start earlier, you're late talking to millennials. It is not early innings. You're in the middle of it. Now, the money is different, and that's what the great wealth transfer matched to their behavior That's why it's an opportunity. You have to match the both. Next slide, please. Okay. 48% of young investors want education and personal interaction. But, and this is the most optimistic data point for me. Obviously, we're an educational firm, so I love this. So they're ready. They're craving education and community, and they do want some one-to-one interaction, but with subject matter experts, contributors, people who have a specific expertise that they can consume and empower their self-directed investing. So they're primed to learn. Data shows it. Next. Now, here's the one that everyone who left the room with Edward Jones, they don't want to see this slide. And this is I'm not going to say Mr. Chubak is wrong. I don't know Mr. Chubak. I think the data would show that maybe there's a different take on it. And what it shows is that 7% are positively responding to surveys about advisors. To them, advisors mean legacy. Advisors means their parent's accountant. It means their uncle's RIA. No offense to anyone here, just reading the data. Sorry, real quick. Now here's the other things. 30% online research. Again, they're primed to be self-directed. They're primed to learn. They are craving education. They're craving research reports. They're craving community that can give them this power and then access. The thing that bothers me is Uncle Mike, 13%. They're at a party. Uncle Mike's got a deal for a well, an oil well in Kansas. Yeah, that's not good. 14%, I like CNBC and Bloomberg as much as the next person, but am I really going to make decisions for my family based on what Jim Cramer says? He's fun. Give him that. Social media, FinTalk. Yes, we are there because that's where you have to talk to your future customers. But talking and creating community off-premise on social media is different than educating. That is part of the community aspect. They're taking it as education. And the one that bothers me the most, 20% say, I don't know. I don't know. That's disturbing. So 93%, other than the 30, 63% are very questionable sources of important financial information and empowerment. That's scary. That's a problem. Next, please. Why? Why? Well, listen, we are in a 42-year high. I was there the first time we hit 6%. Paul Volcker. We had the VIP rate from National Westminster Bank at the prime lending rate, 9%. My dad crowed about it. Suspenders, the whole bit. Didn't wear suspenders, but he did. If he did, would have been very happy. 9% interest, and that was good then. Everything is too expensive. But why is our industries so myopic that we should get all these the Invest Act, hedge, all the alts, 2 and 20? Isn't it time to retire 2 and 20? How about performance-based comp? How about sharing and co-investing and having skin in the game with your investors? Too expensive, 66% saying that is the greatest hindrance to adoption. Complexity, yes, we need more jargon. More jargon, more Sortino, Jensen, we need Johnson, Monte Carlo simulations, more jargon. That's going to be great for millennials, as you can see. 53%, too complex. Plain spoken language. They're not going to spend time taking away from their kids talking about Sharpe ratios. They're not. Lack of liquidity. Okay, that one is a hard one. That's really potentially insoluble for the private investment universe. But maybe the education will show that the lack of volatility and the incumbent stability that it brings should exist. Maybe that 30% allocation is what you don't want to trade in and out. And as I don't remember her name on the far right, the woman in the prior, she said, more active trading is historically more damaging. I agree with that, unless you're a high-frequency trader with the best information. Lack of liquidity is actually a potential benefit. It's just not educated and explained properly. Now, there are blockchain, there are a lot of digital methodologies to create liquidity. What I don't like is when major firms pretend to have monthly redemptions to create this faux liquidity that they have never done actuarial backtesting and say, what happens if all of China takes out their money from our non-traded REIT? Is that okay? Apparently not, that we're finding out now. Apparently not, and I think we all know who I'm talking about. So why pretend to have this fake liquidity when you really don't need it and what you need is education? Okay, no access to attractive offerings. That's the insider's game. Yes, we all want the $1 million ticket, the $5 million ticket, because then we can go sailing on a Wednesday. But that is not right. Access, availability to the best opportunities, that's what I want. And if you fix these 4 problems in a way that are all fixable, you're going to have the largest wealth adoption in the history of this country. Next slide, please. Summary. I've said it. Complexity. Again, we don't need more jargon. Why don't we present and be radically transparent on fees, on co-investment, on the potential gains and risks? Don't need more complexity. Fragmentation. Yes, we all want to go to 7 places to do one thing. That seems natural to me. Of course not. Of course not. One place, unified, holistic, a hub maybe. And those things are, yes, invest, but it's also about learning. It's about getting together in a room like this and bouncing ideas, peer to peer. We don't need 85 places. Inaccessibility. Everyone, at any background, ethnicity, gender, self-identification, amount of money, accreditation, non-accreditation, with compliance, should have access to all deals. They should have access to get successful, like the 7 out of 9 immigrant families and my family. They just need to be spoken to in the right way and where, and educated. Next slide, please. Okay, now this is a little wonky for the maybe for the advisors in the room. Why do we all need 2 and 3% up front? Because of this. This is part of the problem. It's expensive. You know the average cost of acquisition for an advisor, even large ones, Collective, Mercer, Cambridge, $3,500. So how, if it's costing you $3,500 to get a customer, you're going to be able to speak to a $5,000 investor? You can't. Inaccessibility. But if you don't think short-term in the myopia of saying, I got to get all my money now from them, and you understand that this is a lifetime relationship, well, if you nurture, they go from meeting you to being your audience, and this is how we describe it, to becoming a consumer, maybe of educational products or bespoke a la carte, to becoming your fervent cult relationship, that's subscriber, and ultimately investor. Why ask for the transaction up front? Worry about the relationship and the long-term journey, not what is my upfront fees from this potential investor. Transaction first inflicts higher customer acquisition cost. Okay, they really want me off this stage, apparently. How do we do it? Yes, the half of this is about us. If you have a nickel, I'll tell you, Noyack Investing Club, that is the peer-to-peer group and community that I wished I had 35 years ago. All right, maybe I'm fudging that. It's around that time. Education, engagement, that's community. Lots of ways to do that. Off-premise, social media. On-premise, your interactive platform that we're building. In real life, like right here, live events, community. And last but not least, access and empowerment and enablement to investments. Now, for me, and for Noyack, investments are product extension. Our product is education and community. We are education as a service. But to be a truly holistic ecosystem, you got to have all of it. And that's important. Next slide, please. How do we do the education? We're decoding and we're scoring the entire Invest Act private placement, private company offerings. Yeah, it's hard. Try reading 500 private placement docs a week. Not easy. We have 12 analysts, and we're giving a score. Gamification is important when trying to attract audience, but it's real. Take a look. And we're doing it with radical transparency. We scored ourselves, one of which did not come up great. Improving it. Radical transparency. Value first, not transaction first. Forex. If you pay us $15 for one of these reports, or $24 if you don't do anything else with us, are you getting $100 worth of value? Because if you're not, we're failing, and we've got to fix that. I think you are. Frankly, to read 130 pages of private placement for some of these funds, that alone the crib notes alone are worth $24 your time. But there's a lot more involved. And Last but not least, plain spoken. We do not use jargon. Yes, I didn't put on the last S, but I think you know what I meant there. We do not need jargon. You can explain, you can decode, you can say all these things in a way that aspirational investors will understand and will appreciate. Next slide, please. Okay, more about us. Yeah, we've only started 16, 18 months ago, and we have built a pretty big community, shockingly. I say shockingly only because I'm surprised, I guess, at the adoption. There is a massive wish for this, and we just happen to tap into it. 184,000 accredited investors on our CRM alone, and we're doing all of these off-premise communities. So, good start. That's what I mean by community, and then there'll be an interactive community. Next slide, please. Okay, yes, I know some people are concerned. I'm not. I have no aspersions about anyone else here. But what this shows is that there is no one leading with education. And that's, again, I go back to that anecdote about me. That's what I needed. There's no one leading with education. Also, very few are totally, holistically focused on the private investment universe. Well, 75% of millennials and zillennials want private investments over the dying 60-40. And by the way, if you want to see that, we have a video called The Death of the 60-40. It's pretty good. Check out our YouTube shorts. Pretty funny. ChatGPT wrote the script in 30 seconds, by the way, while we were having lunch. I was eating a sandwich. It's pretty good. And then we filmed it. Noyack YouTube shorts. Shameless plug. Next, please. Obviously, you knew this was coming. We're here for a reason. We raised $2 million pre-seed, and we're here for a $9 million safe to introduce ourselves for the first time to the world, so sort of an exclusive. And if you're interested, I'll be in the Galleria. I guess that's called the Galleria. It's the only other room here. And if anyone wants to talk, I'm there. We can go to the next slide. So I told you that I have a vision of who this is for, and of course I'm not a millennial, so it's a little incongruous in that way that I'm talking about this generation. But I remember when I was, and I remember what I needed, and I remember all the people like me and all the other young people who were outsiders to this insiders game and what they needed. And we don't have to do this. We get to do this. This is a privilege. And I'm doing it for them. I'm doing it for my old self. We are Noyack, but so are all of you. And last but not least, that's bonus content. You can take a photo of that. We created that. That is the Summit universe. Feel free. One-time royalty-free license. Thank you very much for your time. I appreciate it.